Hey all, welcome to ShareTrek. This is Raj here. Today I want to revisit Gingko Bioworks, which you know by the ticker symbol DNA on NASDAQ. I want to find out what's happening with Gingko Bioworks. I see equity dilution. I guess you must have noticed that too. I've seen more stock-based compensation, a lot of insider selling, and the share price is at a 52-week low. I want to find out what's exactly happening out there. There's also been a high-level recruitment which brings me a lot of optimism, and it seems to be a logical direction for DNA to follow. I want to examine that also. But before we proceed, I would like to request that you subscribe and press the notification for future videos I plan to publish on DNA, and I also will be publishing on other genomic companies. With that said, let's get started. Welcome back, friends. There's a lot of intrigue that surrounds this company, which is creating its unique market space and has been seeing lots of insider share sales, as well as it saw an equity offer in this difficult market, further diluting the equity. What prompted this closer look into DNA is the news that they have recruited a new head of Biopharma to disrupt the cell and gene therapies market. But first, let me set the stage for you. The way I see it, DNA has been on a big acquisition spree, picking up small, medium, and large companies that it felt were a strategic fit to build its ecosystem. Now we have two tasks that are to be completed, and I believe personally that it's overdue because I haven't heard much about it in the press. First is to rationalize the organization structure to remove redundancies and to harness the synergies. The second is to rationalize assets and equipments to optimize the operating costs. I'm still waiting for that information, and I'm hopeful that we will get some statement from DNA in the next earnings call that about cost savings due to these synergies and efforts for optimizing the organization structure. I would be definitely disappointed if I don't hear anything about that, because the company is becoming colossal and it needs to have proper terms of engagement within. They already may have, but I don't know for sure. Next, let us look at equity dilution. Right off the bat, let's have the $100 million equity offering that was announced in November. That definitely diluted the equity. And last week, we received more information about equity compensation to pay for recent acquisitions. And here are the details. You would recollect my earlier videos on DNA and Bayer deals, as well as the takeover of Zymergen by Ginkgo. In connection with its transaction with Bayer Crop Science on 17th of October this year, Ginkgo granted 9.8 million restricted stock units to 139 new employees. And in connection with the acquisition of Zymergen on October 19, Ginkgo granted 8.3 million restricted stock units to 179 new employees. Each grant of restricted stock units to former Bayer employees will vest as to 25% of the restricted stock units on the 1-year anniversary of the grant date, and 1/48 of the restricted stock units monthly thereafter. Each grant of restricted stock units to the former Zymergen employees will vest either as 25% of the restricted stock units on the 1-year anniversary of the grant date, and 1/48 of the restricted stock units monthly thereafter, or for certain employees, 100% of the restricted stock units on a range of dates between approximately 2 and 13 months from the grant date, and will fully vest on the last day of an employee's employment. Now, to just summarize what I gather from all of that, my understanding is that this means that insiders will have a lot of shares, and for their own needs, they may have to continue selling. And they would keep selling the share, keeping prices low for at least another year, in my opinion, or more than a year, because it's going to take time for it to vest. At present, institutional investors hold around 88% of the total shares, to the best of my knowledge. ArcG and Bailey Gifford and Company are two of the biggest institutional shareholders of Gingko Bioworks or DNA, with ArcG at 11.5%. and Bailey Gifford at 18%. Insiders own 13.75% of all the shares. As insider holdings are a form of compensation, these shares come out for sale periodically as and when the holders need cash. This doesn't essentially mean that the insiders fear that the company is on the wrong track or they have some bad news. It just means that part of their compensation is coming through these shares, and they have to sell it from time to time in order to meet their personal expenses or tax liabilities or whatever their personal situation might be. For starters, insider Reshma P. Shetty, one of the 5 founders, sold 102,000 shares of DNA stock in a transaction that occurred on December 14th. The shares were sold at an average price of $1.69 for a total transaction of $172,963. Following the transaction, the insider now owns quite a substantial amount of shares, which means that she can make several transactions like this going forward for a long time. And her stake is valued at a huge amount. I think it's close to $32 million, if I'm not mistaken. And we have 4 other founders with huge holdings that may need to sell in the next 12 months. And we don't know how much they will sell and what reason they would have for selling those and at what price it will be going. So to get a complete perspective, look at the table here that you see on the screen. I have taken this from NASDAQ. It shows that the sales are way more than purchases by order of magnitude. And also in the last quarter, insiders sales itself was around 36.3 million shares. These are bound to hit the stock price because as and when the stock price rises, insiders will find it opportune to sell, assuming there are no blackout periods. Also, remember that restricted stocks granted for Bayer and Zymergen employees, these stocks will potentially start selling a year from now. So from a stock price perspective, I see the stock bouncing in the bottom as insider sales continue to trickle out over the next year and a half, unless some positive catalyst happens that can blow everything out of the water. That said, the only way I think to play this share seems to be range-bound swing trading. I'll publish some ranges on the new year, or maybe in a couple of weeks when I get around to it, because I'm doing a lot of reading for a whole list of videos that I want to release in the next week or so. So at the earliest opportunity, I'm going to do some technical analysis and I'll publish some ranges. So I would publish some rate at which we are closer to which you can buy and closer to which you can sell for a swing trade opportunity. And please press the subscribe and notify bell if you don't want to miss that video and future videos on Gingko Bioworks. Now for some good news. They have recruited Behzad Mahdavi as head of Biopharma manufacturing and life sciences tools. Behzad has an impressive track record of commercializing novel therapies. His task now is to leverage high throughput cell production expertise of Ginkgo to produce optimally accelerated process for creating biologics, as they did with production of mRNA vaccines with Moderna. It should be noted that Ginkgo has recently announced another series of biopharma partnerships, one with Optiva, another with Selecta and Merck, as well as acquisition of Circularis, a proprietary RNA screening platform. Ginkgo has already demonstrated they can build around 10,000 CAR T cell libraries and see which one of them are most promising candidates. For example, they found a subgroup of cells that are much more resilient to exhaustion and could potentially be used to develop treatments for solid tumors. Taking advantage of the high throughput cell engineering combined with bioinformatics can improve the number of shots on goal for each new target. Here's the Ginkgo proposition for biopharma companies. The type of high throughput scale that Ginkgo has is a lot harder to accomplish without investing heavily in the latest technologies and to update the entire R&D infrastructure when it pertains to pharma companies. This is why partnering with a synthetic biology company like Ginkgo that has demonstrated specific expertise in this area could bring substantial savings for biopharma. This could lead to more efficient cash runways and better product pricing and competitiveness. Overall, I think Ginkgo has identified a great space and has first mover advantage and has scaled up quickly. They need to quickly focus on deriving synergies of their acquisition to make progress and reduce risk. And I think once they demonstrate those kind of activities, it will reflect in their quarterly results, where we can see reduction in operational expenses and greater operating efficiencies. That will start boosting the share. And also their collaboration with the existing biopharma partnerships can result in products that will give greater revenue and greater visibility for DNA to other biopharma companies, and they could become a go-to for these kind of scaling up activities. Well, friend, that's all I have for now, and I hope you liked this video, and I would be very curious to hear what you guys think about DNA. I'm personally planning to invest a little bit. Once I do a little technical analysis, that will motivate me to do that sooner rather than later. I want to buy low. And I have seen that the institutional investors are increasing their stake in Gingko Bioworks. That's a very positive sign. So I'm planning to put a long-term investment in place. I'll share my investigations with you, and I'll also let you know what is the price at which I have entered Ginkgo when I do that. So please let me know what you think, and please do not hesitate to press the like and subscribe button in case you have not yet subscribed. Thanks and have a great day. Bye for now.